What's good, YouTube? What's good, traders? So this will be the first episode on trades I missed, and I'll be doing a weekly backtest on Gbpusd. So let's get right into it. So first of all, what I like to tell traders is starting from your high time frame. For me, I start from the daily or 4-hour time frame to know where the market is heading, or if it has taken any liquidity, or if I just want to highlight the 4-hour PDRA. So let's see how it goes. So this is the 4-hour, and this is the PDRA I can find on the 4-hour. So let's start by looking at our high and lows. Let's look at our highs and lows, then our PDRAs, which are fair value gaps and other blocks. So I mostly look for my fair value gap. So since we're on the 4-hour time frame, this is my fair value gap right here, and you can see fair value gap that is closer to the other block is a powerful fair value gap. You can highlight your fair value gap up to the end here, or because of clarity's sake, I'm going to just highlight it like this. This is your fair value gap, and you can see your breaker here also. This is a breaker. Here, a failed order block. You see how powerful it's going to be when market taps into this zone here. So when market taps into this zone, it can give a very strong reaction. So let's take this one away. So since I'm looking for the market to tap into this PDRA, this fair value gap, I'm going to be expecting to see a valid setup right there. So you can see markets tapping into the fair value gap here. So the next thing for me is to look for a break of market structure, and you can see a break of market structure is visible right here. So we have market going down and tapping it, also taking this previous high. So for beginners, you can actually just highlight all your highs on your high time frame first to see if market is going to take out the high, then return. So you can just use this one as your confluence, this fair value gap here and this high. So since market has taken this high, you just look for a break of market structure, which is this one here. You can see market close below this low here. As market close below the low here, you look for a newly formed fair value gap right here. So this is where you take your entry. As you can see, this is going to be the entry. This is another fair value gap, and you can take your entry and your stop loss at the end of this order block here. So let's see how the market is going to play out. So this is it. This is going to be the entry here, for a sell, and this will be your stop loss. You can also put your stop loss here for space, so it doesn't take you out and go your direction again. So, and your take profit will be below a previous low. You can put your take profit here, or you put it here. So looking below at this previous low here, since we are the higher time frame, any low is very important. So seeing that we are coming from a fair value gap here. Market reacted to the fair value gap. Market takes this low here, so I'm expecting market to form a fair value gap here. So when market forms this fair value gap on a lower time frame like the 15 minutes, let's go over to the 15 minutes. All right, let's go back to the 15 minutes. So this is your 15 minutes right here, and you can see the low that was taken. So this low was taken right here. This low was taken right here. All you need to look for right now is your break of market structure. So since I've not really gotten a direct or clear break of market structure that can give me a fair value gap here, so I'm not going to enter here. This is a fair value gap that might give me an entry, so I would have taken this trade and put my stop loss here, just like this. So I would have taken this trade like this and put it above the previous high here or here. So but I did not take this because there was no clear break of market structure. So I waited for a break of market structure that was clear, and I found one. This was a break of market structure, also forming a fair value gap right here. So this is my break of market structure here on the 15 minutes. It broke this previous high here on the 15 minutes, creating a liquidity. This is a liquidity, which is my low here. So after market creates this liquidity, takes the liquidity, also taps into this fair value gap. You can see how the market reacts. You can see how the market reacted to this setup. So you can put your stop loss right below this previous low here, giving it a space, and choose to take your profits at the end of this previous high, or at the end of this one, or better still, you can put your third take profits here, so giving you a 1 to 5 risk to reward. So let's go over to the next setup here. All right, so this is another setup here. You know, your previous high or your previous low are also PDRAs. So this is a previous low. Now I'm expecting a setup right here. I'm expecting a break of market structure and giving me an entry here. So you can see that I'm on the 15-minute time frame, right? So I'm going to have to go to the lower time frame, and you can also see a fair value gap which is formed on a higher time frame here. This is on the higher time frame. Let's go over to the 1 hour and be sure we have a fair value gap here. So you can see this is a fair value gap on the high time frame here. So we are just expecting market to take this low. We're expecting the market to take this low and go to the 5 hour. We will go to the 5 minutes time frame. You can see market closing above this previous high on the 5-minute time frame. So after market closing above the previous high right here, you see a PDRE, which is your fair value gap. Now let's highlight this fair value gap right here, and that is your entry. So it's basically your high time frame PDRE, then a break of market structure, and or you can also call it market structure shift, and you take your entry. So this is the entry here. Your stop loss will be below the low, or below the low of that order block that created that FEG. So after taking the trade, your take profit should be before a previously formed fair value gap, because when market taps into a fair value gap, it might trigger a reaction and it might take you out. So you can put your take profit here, or you put it above a previous high right here. So that is giving you a 1 to 5 risk to reward. So that was on 21st of Tuesday. So let's go over to our next trade. We have a fair value gap here. This fair value gap is going to be quite strong because it has a breaker to it. So we have a breaker here. After markets created this breaker, it also created a fair value gap here, and you can see lows here, lows that has been taken. These are liquidity. This is also liquidity here, this is also liquidity here. Let me highlight it for you. So you can see this is also liquidity here. So what we're looking for is basically a break of market structure and a fair value gap. So since market is coming from a high time frame fair value gap, you can also see this fair value gap on a 15 minutes, and market taps into this fair value gap. It creates a break of market structure, which is our MSS also. Simple as that. So it creates a break of market structure and also a fair value gap. This fair value gap can be seen in the 3 minutes, but as long as it is like this is also a fair value gap here. So markets used the power of the order block here, because this order block has a fair value gap. So that is the entry there. So let's take it from here. From long position on that 5 minutes, this would be your entry. Put your stop loss here, right below that low, and since it is coming from a higher time frame fair value gap, you might have a bigger risk to reward. So you're taking the entry from here to your previous high, which is a 1 to 3 risk to reward, or this high here, or you can as well put it here. You can see the previous high here. So when you take your entry, you make sure you take your profits above the previous high. So that is where you take your profit. So giving you a 4.3 risk to reward. So here is the next setup. So I found this setup also. This was a good setup, and you can see that this setup has a break of market structure, a fair value gap, and your entry here. So this is your break of market structure right here, still on the 5 minutes time frame. So you can see the break of market structure right here, and this is your entry. These are liquidity this is the liquidity that the market has taken. But before we know that there is actually a setup to be anticipating, to be waiting for here, we have to first look at where the market is coming from a higher time frame. Always use your higher time frames. Now let's go to the 1 hour time frame to see where the market is coming from. Now you can see here that market has taken a previous high. This can be seen as a high also. What we need to look for is entry into that fair value gap. So what we need to look for is your entry into that fair value gap. So let's go back to but before we go back to our one, we can see this setup here on Thursday 23rd of January, and this is the setup here. So we have a fair value gap here on a 1 hour time frame. This is your fair value gap here. So you can see it. Let me make it clear for you. This is your fair value gap here. This is your fair value gap here. So what you need to look for is a break of market structure around here. And bear in mind, this fair value gap also has a breaker here. That has not been mitigated yet. So this is also a confluence for your entry. So we need to look for a break of market structure every time to give you that assurance that the market is actually going up. Now this is your fair value gap here, from here to this high, to the tip of the wick of the previous candle here, or you can just make it to the end of that order block. So what we need to look for is our break of market structure. As you can see, this is your fair value gap. Once again, this is your fair value gap, and you draw your fair value gap to these spots for confirmation that is actually there. But when you want to enter, you just put your stop loss. This is your entry here. You can put your entry at the center of your fair value gap and put your stop loss right below the low that created that fair value gap, and your take profit should be at the high, the previous high. As you can see, this is the previous high here, previous high here. This is giving you risk to reward of 3.85. So that is another setup right there. This is on Friday 24th of January. So let's look at our time frame. This is our 1 hour time frame, and this 1 hour time frame has created for us a fair value gap. As you can see, what you need to look for is market taking out the low that has been formed there. After market takes out this liquidity that has been formed here, or as market taps this fair value gap, what you need to look for is your break of market structure. And you can see it here that the break of market structure has been formed. This is your break of market structure right here, coupled with a breaker. So this is your break of market structure here, and also a breaker here. This is also a breaker here, and this is your fair value gap. Remember, your fair value gap is closer to your order block, and this is it. This is your fair value gap right here. You can draw it down to the end here, below that's wick here, and your entry. So you have gotten an entry there, and this is your entry right at the creation of the order block, and your stop loss, which is here. So you're going to be taking your profits right above the previous high. So this is a high we'll be looking at here. So you can use your previous high here as the first, or you use this one here, giving you a risk reward of 3.2. So that is another setup there. So let's go over to Monday 27th of January. So we have a PDRE, which is an FEG that also has a breaker. You can see the breaker here. It also has a breaker, so it's a strong FEG. So let's take this out. So let's move into our 5 minutes for this, and this is 27th of January. So let's move into our 5 minutes. This is 27th of January, 5 minutes. So you can see that the market has tapped into the fair value gap. Market has tapped into the fair value gap, but the market failed to tap into this newly formed fair value gap because it has created a break of market structure right here. So what you need to look for is for market to tap into this fair value gap right here. So we draw our stop loss to the end, and this is the trade that did not happen. So you can just take profits to the end, and right above the high of that, right above the previous high here. So you can see this is a risk reward of 3.05, but the market did not tap into it again. Instead, market used this fair value gap right here to take the trade. So that was gone. And the next one we have is this. This is another trade here. This is a trade here. Let me highlight this trade. I definitely missed. So this is a fair value gap here on that same 5 minutes. Fair value gap on that same 5 minutes, and you can see market creating another fair value gap here. In fact, this is void, so there will be a delivery in price, and market is going to tap into this fair value gap and fuel it to go bearish. So as you can see, this is a previous high that has been taken, also this one as the liquidity that has been taken. So this would have given you a probably 1 to 4 or 1 to 5 risk to reward. So entry here, and your take profits right below the last low. So this is about 5 points risk to reward. So let's check this one. So let's check this. Why I highlighted this. You can see we have, so you can see the fair value gap that has been highlighted here extended to this spot where the market has reached. I would want to look for a break of market structure around here, a break of market structure, right? So this break of market structure, let me take this out first. So this break of market structure has happened here. Let me delete this so we have a clear picture of it. So this break of market structure has happened there. It hasn't happened here for me, except on a lower time frame. So let's continue using this 1 hour time frame. So this is a break of market structure here. You can see the market goes up, now comes down to break it and close below this low right here. So this is a break of market structure. So our entry will be the fair value gap that has been created prior to that break of market structure. So this is it extending down to the right. So the entry will be after market taps into this fair value gap. So this is it, a short position for this right below the fair value gap, and put your stop loss right above this high that created that fair value gap. You know that prior to this, market had tapped into a previous fair value gap, now creating a break of market structure and also a fair value gap. So we are entering with this fair value gap, and you see extending it to the previous low. You can take your profit here, but there isn't a fair value gap or anything that could stop it. So you know that since market is coming from a higher time frame fair value gap, you need not more. This is a fair value gap that has been formed here. Let me delete this. So I would need to take profits right below this low right here, because anything that will make the market come to this place, there would be a bouncing off, there will be a reaction from this fair value gap, since it's also from a 1 hour time frame. So this will be the take profits, and it's giving a risk reward of 4.88. So the next trade will be this. So this is the next trade, and we extend the fair value gap. Since we are on a 1 hour, this will be a powerful fair value gap also. Extend the fair value gap. This fair value gap doesn't have a breaker, but this one has been taken here. This one was used for this trade. So this one we are going to look at is this fair value gap that is here. This is our POI. This is our point of interest that this fair value gap used as an enforcer. So this is an enforcer for this created fair value gap, since we did not have a breaker. So a PDRA before a PDRA makes that PDRA stronger. So this is a PDR, a fair value gap, makes this fair value gap stronger. So what you need to look for now is markets taking out a previous low. So we have a previous low here that we need market to take out, and after market takes it out, prior to coming to this fair value gap, we need to anticipate for a break of market structure again. So after a break of market, before or prior to a break of market, prior to creating that break of market structure, we need to look for our fair value gap. So let's go to our 15 minutes to check for a fair value gap on this spot, and which is Monday 3rd of February. So this is a Monday 3rd of February. So you can see our fair value gap has been right here, but market did not tap into it. Instead, market used this fair value gap to go all the way up. So you can see market just used this breaker right here. After market tapped into this breaker, you can see that the market also had a liquidity that was taken here. On a lower time frame, this liquidity was taken here. So market failed to tap into this discount zone there. So if we were to take this market from this spot for a long position using this breaker, we'll be having our entry from this spot and taking our stop loss here, also going as far as the previous high. So this is our previous high here. So this is the previous high here. You can see how far the market can go. So that is it, the previous high there. So let's go over to the next trade. So this is another trade where market is coming from a fair value gap. In fact, there are two trades here. So let's take this out. Let's take this out. So if you want to re-enter this trade, you can as well use this fair value gap right here. What you need to look for now is your break of market structure and a fair value gap. So you can see your break of market structure right here. Market broke above it and returned, tapping into this fair value gap right here. Let's use the order block and fair value gap. So you looking at this fair value gap right here, you can just take your entry from here to putting our stop loss here, taking your entry to the previous high, which is giving you 2.26 risk to reward, or taking it to the previous setup's high, giving you a re-entry. But look at this, market has taken you out already here. One, because you did not take enough space for it, and two, because this spot has to be retapped. So this spot would have taken me out if I was about to re-enter this trade. So this would have been a better trade for the market, using this one as your liquidity. So you know, markets will always want to take out liquidity, so you could have been the liquidity if you are taking that trade. So this is a liquidity here that has taken this low After market takes this low, it also taps into a fair value gap here. After market taps into a fair value gap, what you need to look for is your break of market structure. If you had failed to use your break of market structure, you would have entered here, but that is not a good spot. You still have to wait and be patient for market to tap into a fair value gap. So market taps into this fair value gap, but did not give me a break of market structure, but rather gave me a break of market structure around this spot here. After giving me a market structure break, I would use this fair value gap to enter, and using this as liquidity for market to push upward, so giving me a bullish setup. So this is it. I'm putting my stop loss below this low that created that fair value gap, and my take profits right above the previous high, or using this as your take profit here. So giving you a risk reward of 4.63. Now onto the next one, which is Wednesday, 5th of February 2025. There is another fair value gap here. This fair value gap was cited on a 1 hour time frame. This fair value gap was cited on a 1 hour time frame. So the next thing we need to look for is our break of market structure, as always. So for clarity's sake, let me go to the 1 hour time frame to check for Wednesday, 5th of February. So you can see on Wednesday, 5th of February, we have a fair value gap, like I said, on the 1 hour time frame. So that is why you have to start with the higher time frame first to identify your highest PDRA that market will respect, either your high, low, or your fair. So on the 15-minute time frame, you can see that market created a break of market structure right here, and also a fair value gap right here. This fair value gap is actually strong because it also has a breaker here. This is a breaker. So it also has a breaker, so it is quite strong, and you take your entry from this spot. To the end of that low that created that fair value gap. So your take profit should be above the previous high. So you could take profits here, which will give you just a risk reward of 1 to 2, or you take profit here, which is this spot here, which will give you a risk reward of 2.89. So let's take this. You can lastly put your take profits here, which is giving you a risk to reward of 5.29. So you'd have taken profits of 1:5. And so the next setup we have here is this. So on a 15 minutes time frame, we can also see a PDRA, which is a previous fair value gap, along with this liquidity, this high that is here. So this high that is here, and this fair value gap. So that's being said, this has been highlighted for market to tap into it and give us a reaction. So market taps into this fair value gap. After market taps into this fair value gap, what we need to look for is our break of market structure. After tapping it, this is our break of market structure right here. So this is our break of market structure right here. We are not using this fair value gap because here market has not broken any structure, but here we can see the shift in the delivery of price, and you look for your fair value gap right here. So I've seen a fair value gap that I could use, and this is a fair value gap right here. So prior to market coming to this fair value gap, I should be ready for an entry. So after the break of market structure, because market tapped into a previous fair value gap, so I need to look for another fair value gap, a previous fair value gap on that time frame, or I could just go to a lower time frame to redefine my entry. But for now, I'm okay with this. So I can just take the position here in the opening of the fair value gap, and you can put your stop loss here, or you put it above the high that's tapped into that fair value gap. So let's just use this, give it a room, give it a little room, and you see market tapped into it and reacted. Market is going low to this spot here. So you want to take your entry, and you want to take your entry and you put your stop loss above the previous high, and put your take profit here, the previous low, giving you a risk reward of 3.6. But at the same time, because of this breaker and fair value gap right here, you wouldn't want to go past this low. But if you have that higher time frame mindset, that okay, I'm coming from a high time frame fair value gap or a high time frame PDRE, you can also put your second take profit here, because there is also a fair value gap here that hasn't really been filled. Or better still, if you are really good to go, you can just put it here, which is just this previous low right here, and you can see that you have a risk reward of 5.6. And let's go over to the next one. I did not take this setup, but let me just look at it for you guys. This setup just tapped into right here. So what we need to look for is break of market structure. We haven't found a break of market structure yet. Even when I go down to the lower time frame, like the 5-minute time frame. So we are on Thursday, 6th of February 2025. Let's go to 5 minutes. So let's look for our break of market structure. So we actually have a break of market structure here, but it was not clear because it did not actually close above it. It's just a weak. Aside the fact that it did not close above this previous high, was that I did not see any fair value gap here, so I couldn't have taken that entry. So I would have used this fair value gap, fair value gap right here, but still there was no break of market structure here, so I wouldn't have taken any entry here, probably using this one right here. So I might have used this entry right here, but I was not okay with the trade because it wasn't giving me bullish move yet. So I looked at this trade and I felt okay, we have a previous low here. This is a previous low here. So what I need to look for is a break of market structure. So this break of market structure was not really clear for me, but looking at it, I believed it was going to go to the upside. So let's look at it this way. So after market takes out this previous low, I was looking for a break of market structure and a fair value gap. Now, looking at this, there was no fair value gap here except this spot here. This spot will be used for a fair value gap. So after market tapped into this fair value gap and also created a breaker on a lower time frame, I felt that okay, this is a good spot since market crossed this breaker. It's also a good market structure shift, and I use this as my entry. So let's see, this is your long position, this is your entry here. You can use this as your stop loss or use this. It's better you use this. So this is your entry here. And you target the previous high. This is your previous high here. You can see the market is giving you a ratio risk reward of 2.64. You can as well put it here, just above this wick right there. Market is giving a risk reward. You can see how well the market really went past this high, because we are coming from a high time frame coupled with a breaker right here. This is also a breaker. You can see how powerful it's going to be when markets tapped into it and goes up. So let's take this one out. So we have this one here. This one is, let's use the 1 hour time frame. Let's use the 1 hour time frame on the 11th of February. So on the 1 hour time frame, you can see that there's a fair value gap right here. There's a fair value gap. So this was the low I was looking at. Once market tapped and takes that low, so market tapped into this fair value gap and also takes this previous low, giving you a possibility of creating a break of market structure. Now you can see that we are on the 1 hour time frame. So let's go to the 5 minutes or 15 minutes time frame. We have here a break of market structure, but this break of market structure is not as friendly as the others. Or you can as well see a breaker there. This is looking like a previous high. As you can see, a bullish candle here that market closed above, and that bullish candle was a breaker. So you can see how powerful any fair value gap would be around here. So this fair value gap was going to be strong because prior to being created, there was a fair value gap that it tapped into and also a previous low that was taken here. So let's look at where the market is heading to. So looking at this fair value gap, you put your entry here and your stop loss right below the candle that created that fair value gap, and your take profit is right above your previous high. you can take profit here, but it's not advisable to take profit here because it's not really coming from a higher time frame PDRE, which is your fair value gap. From a higher time frame, you wouldn't want to take your profit here, but rather take it here, right above a significant high right here, and below a significant fair value gap right there. So fair value gap on a high time frame being tapped into, you just go into your lower time frame to search for entries. Now let's look at the next trade. So I was looking for an entry right here. Let's go to our 1 hour time frame back. So when I don't get to see a significant PDRE or fair value gap on a lower time frame, I go back to my higher time frame PDRE. So I saw a PDRE right here, but it was not as friendly like the rest. This is a breaker right here, and your fair value gap right here. So this is a fair value gap right there. So let's go back to our lower time frame. So our lower time frame, we'll get to see what is happening inside these PDREs. So let's go back to our 5-minute time frame, and bear in mind we're on the 13th of February, that is on Thursday. So on the 13th of February, breaker and fair value gap right here. So on this fair value gap, you can see how the market, you know that this is a fair value gap right here that we just highlighted, and this is a previous low that was taken out. So what we need to look for is our break of market structure and a fair value gap. Now, since market has taken this low, we did not see a break of market structure here. In fact, the market respected a fair value gap here and went down. So since market the market tapped into this fair value gap, went up, respected this fair value gap right here. Let me show you. Market respected this fair value gap right here. Then you need to wait because there's a fair value gap market wants to respect, and the market has respected it. So it might bounce you out, and it might take you out. Since we are still waiting, market tapped into that fair value gap once again. What we need to do now is to look for the break of market structure right here, right above the previous high and our fair value gap. Now I've seen the fair value gap here. What you need to do is to highlight it to this end, to the extreme wick of that candle right here, and this is your break of market structure here. So indicating that market wants to go to the upside. So now let's check how we enter. So we are going to enter using that fair value gap right there, and putting your stop loss right below that wick, and taking your TP to the previous high, or you take it right below a breaker and a fair value gap. This can be powerful also. You can see how market respected it and went down, creating a wick, but market still cut through and went above the previous highs. You can see a double top. This double top, market likes taking it out as a sweet liquidity. So when market takes this one out, you can use that as your take profit, so giving you a 2.96 risk to reward, or you just use this as your take profit right here, giving you a risk to reward of 3.8. So from this spot to this top spot right here. And there's another setup I couldn't take because it was so far. There was a fair value gap right here and a previous high that I indicated right here. Now we have market tapped into this, not creating a break of market structure here, but creating a break of market structure right here. After market created a break of market structure, now what you need to expect is a good entry after crossing this previous high that you would have taken as your entry. I was expecting the market to take this fair value gap and just pierce through and tap this order block right here, but the market failed to do so here. The market did not tap into it, so market went down, respected this fair value gap and created a sweet break of market structure right here. And you can see that the market is giving that risk to reward of 3.88 here, taking this previous high. So let's go over to the next one, and this one has not happened yet, but I'm expecting the market to create a tap into this zone here because we have a strong fair value gap. It has a breaker right here, so this is a breaker right here along with this fair value gap and this liquidity right here. So if market taps into this spot, so I'll be expecting the market to take this liquidity and take this liquidity and bounce off like this, creating a break of market structure and tap into the FEG. Just go like so. So that is what I'll be expecting on this spot, depending on what the order flow of the market is prior to coming to this spot right here. So this is a strong spot I'm waiting for the market to tap into, creating a bullish order flow for the next week. So why I highlighted this spot was also an entry on a 3 minutes because it tapped into this fair value gap right here. But I won't be taking this trade. Why I won't be taking this trade? Because it's on a 3 minutes and anything can happen prior to market coming to tap into this fair value gap. This is the GBPUSD backtest for the week. So I started from the ending of January to February 15th. So till next time, I'll be sharing on next week trade on GBPUSD. Turn on your notification bell and till next time. Peace.